Welcome. Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, I'll be talking about gold, right? I know I made a video, I think two videos in the past where I've talked about gold and the COT index and how useful it can be. And I'm back again to talk about an interesting development that has come about. Okay, so since last time, gold continued to rally higher, and yeah, it was just an upward rally, and up until around November, the election week, the U.S. election week, and then yeah, it just dropped and yeah, closed the week quite significantly down. Managed to erase the gains of the couple of past couple of weeks, and yeah, recovered and now it's here. So what I am here to talk about is the COT index, the Commitment of Traders Index. And remember what I said in the previous videos. If you haven't watched them, the link is in the description. You can go and check them out. What I discussed and what I showed you is how useful this index is when it comes to trading gold, but not necessarily on an intraday basis, but it's useful to give you a bias for the next couple of weeks. And it's even more useful when you are trying to um, DCA, dollar cost average, into gold, right? It's going to tell you when you're supposed to be buying more, when you're supposed to buy less, and that's it. The main point was this index is useful in telling you when to buy, not when to sell. Buying in this context meaning taking a long position, and selling short. Don't short. All right. This is, you can clearly see this is an uptrend. Gold is usually in an uptrend for most of the times, so it's not a very good idea to try and short something that is clearly going up. All right, so that's out of the way. Now, discussing the latest development, as you can see here, the index has picked up quite a bit and it's at 41. This is the 1 year index and it's almost getting to 50. Remember what I said, whenever this index seems to be crossing above 50, coming from below 50 going above 50, it tends to make for a great buy signal. That's what usually happens. Like you can see here, this is 2023, August 2023. There was a small um, buy signal here, and then there was an even stronger one here when the index was picking up to 85. The stronger buy signal came in here. Again, in early this year, this is in February, there was another buy signal that came. Yeah. And as you can see, price just rallied from that point onwards, and there hasn't been any significant retracement except for this. All right. So now that gold price seemed to be dropping, the index started to pick up. And note, all right, the index has been picking up, not exactly picking up, but it's been this seesaw kind of thing whereby it's trying to climb and then going back down, climb, going back down. This is at 3. This again 3, back to 0, 3.6, back to 0. And then at some point here, it went up to 18, which again was a small buy signal at this point. So if you would have bought at the opening candle of the new week of the following week, you would have caught a nice entry there. So yeah, again went back down to 0, started picking up again, 6.6, went back down to 0 again, started picking up, and it has not yet gone back down to 0. Um, being at 0 here doesn't mean it's a sell signal. It doesn't mean it really. It's not telling you to do anything, right? It may tell you to take profits, but I honestly wouldn't do that. It just doesn't mean anything. This index starts to be useful when it's above zero and rising, either rising or falling. That's when it's really useful. All right. So being at 41 currently, this is trying to send the message that the commercials here are turning almost turning bullish, right? And not fully bullish. Remember, this is an index, and the commercial positions are usually bearish, like they're usually net bearish. So this index tells you to what extent are they bearish, and the the time window here, 1 year, it's a rolling 1 year period, telling you how this index is essentially telling you how commercials have been either bearish or a lot less bearish over the past 1 year in that 1 year rolling period. And this is trying to tell you this is trying to tell you that there is likely to be an upward impulse in the price of gold because these are short positions reducing. All right, this index is picking up like this, it means the short positions are reducing. Therefore, the commercials are getting ready for an upward leg in the price. And yeah, this is not something you can argue about, because if you just take a look at what has happened in the recent past, that's what usually happens when the index starts to pick up and approaching 50, almost crossing above 50. Price usually follows, starts to pick up shortly afterwards. You can see here, price started to pick up shortly afterwards. Even here, there was very minor retracement, and price started continued rallying higher actually because it was at an all-time high. And you can see when price is at an all-time high and commercials are reducing their short positions, it means they expect the price to rally higher to some extent, right? Yeah. And now that you can see, even the current market conditions where we are now, price is in the range of the all-time highs. Yeah, very close. This is a $200 difference from 2800. It didn't exactly reach 2800, but from between 2800 to 2600 is only a $200 price range. And if commercials are starting to reduce their short positions even at these levels, that's trying to say that price is likely to continue rallying higher. And the degree of reducing the short positions is what's indicated here on the index. And if the index starts to steepen, like going up aggressively, like here, it was really picking up aggressively for several weeks successively. That, of course, was to indicate that price is also likely to pick up aggressively in the following weeks. And that's what's happened. So, what am I trying to say? What I'm trying to say here is you might see an aggressive price leg upwards from this point, all right? Because this is usually something very accurate, and you have seen it for yourself, or rather, you're going to see it for yourself if you haven't. And you might see price starts to pick up aggressively, probably refreshing the all-time high and going above 2900 even, right? Of course, that's how the situation progresses is especially going to be indicative of how strong a price move you may expect to see. For example, currently the index is at 41. If the index goes above 50 in the data that comes out on Friday, it means that's going to be about a 9.9, what do you call it, 900 basis point jump in the index, right? Or 9% jump in the index, and it's going to mean that the commercials here are expecting an aggressive price leg upwards. going forward in the next couple of weeks. All right. So you're going to wait to see what's going to happen there. But as it is now, it's saying this is a buy signal. Maybe not now because it becomes um, it becomes extremely valid when it starts to go above 50. But even now, it's showing that it's a buy signal. Actually, if you stoop lower to this is the 1 year index. If you go to the 6 month index, it's going to show you something different, right? Not exactly very different, but it's something similar, showing you that on a 6 month rolling basis, the commercials are now almost very bullish on price at this price level. You may think price is very high, so a retracement is likely to happen, or a pullback, correction, all those names. But if this index is showing commercials are expecting another significant upward leg in price, it's very likely to happen, because even if you check back the past in the past, this is from 2021, whenever the index is this high, it usually it's usually a very valid buy signal. This is 2020 when the index was at 100, and boom, price rallied, made a new all-time high. Between 2021 2022, the price was essentially flat. So yeah, the index was, I don't want to say useless, but it didn't produce big price legs as expected, but it did mark the bottoms. Like for example, here you can see this is February 2021. Price was, well, the index was at 100 and price formed a bottom here. And as the index went back down to zero, price kind of stayed above that point. All right. And moving closer, it becomes more and more clear. From around 2023, it becomes more and more clear how this index is useful in showing you when price has bottomed, because this is 2021. Yeah, 2021, February, the index was there at 100, and true to that, price formed a bottom at that level, and it continued to rally higher. Yeah, again, this is 2022. The index was at 100. It stayed at 100 for some time, and at this point, it was not exactly a very good buy signal, but it was still a buy signal. And yeah, in the following few months, price did start to rally higher. And something else I would like you to remember is that this, like I said, this index is not very useful in day trading, because it's going to mislead you, because sometimes, as you can see, it takes a while for the bullishness in the index to be reflected on the price. All right, it may take a while, like at this zone here. So what this is useful for is for those long-term positions, whether you're trying to grow an account through investing, long-term investing. This index now is what's going to give you those very nice buy opportunities when they come. All right, and you really need to keep checking this thing at least once a week. If you can't once a week, just do twice in a month, because yeah, sometimes they pick up very quickly and you might miss your move if you were away for too long. Like you can see here, the index was at 100 and it didn't stay very long at 100. This is in 2023 October. Yeah, the index was at 100, and yeah, a price formed a perfect bottom there, and it never looked back. It continued, it rallied higher, refreshed the all-time highs, and that move is still going on into 2024. And you can see again, even when price seems like it's at the top, it can always go higher, because yeah, this is gold we're talking about here. It can always go higher. So even when the index is currently at 97, when and if it's going to get to 100, it's going to be a very nice buy signal at that time. Even now, it's a good buy signal, but what's the difference between 97 and 100 is that you may have to wait for some weeks for the move to be actualized. All right. Yeah, and you can see the gradient here is really what's going to tell you the kind of volatility to expect, the gradient of the index here. Because like you can see here, um, between June, this is June, this is July actually. Between July to October, when the index reached 100, it was a very steep upward leg in the index, all right? And true to that, that's when the index hit 100, price did replicate that steep rise in the index that was happening in the past few weeks. So, yeah, that's what I'm saying. When this index is this steep, it means even the coming upward price leg is likely to be very steep. And of course, not to try and go too deep into other factors, but geopolitical tensions are still playing a major role in the price of gold at this point because, like you saw, I don't know if you saw, but the conflict in Russia in Ukraine, right? Russia versus Ukraine, the conflict seems to be escalating, and some of those geopolitical tensions are likely to be reflected on the price here going forward. And important to note, and I'm insisting this, and I will continue to insist, this steepening of the index is very important to note here. It's showing you that if price is actually going to rally higher, it's going to be a steep upward leg. So you want to watch out for that. That's why if you think the gold price is going to fall for whatever reason, it's important to consider other factors. And the factor here is telling you that don't be surprised when it actually rallies higher, because, yeah, that's what's likely to happen. All right, that's it for this video. I hope you found it helpful. You can leave a like if you did, and feedback is highly appreciated in the comments. Also, if you have a question, you can comment, and talk to you in the next one.